with this upcoming PPI. We will be trading here on live the upcoming PPI along with some significant news coming later. So this is live session for this NY stream. So let's first look at overall stream. Looking at everyone to show up here. Welcome. So we can see there is a significant move in the market at the moment due to some fundamental as well as technical. As first of all, would like to the stream is on. Thank you for joining here, and we'll be looking to see some initial trade setup in this session. First of all, looking at the market to see that where the price is currently heading. Now, welcome. I hope that the stream is on. So there is a potentially a break from this high, and okay, so we can see the market has reached a key level, and from there we might see that the price to have a deeper pullback or potentially to continue with this uptrend. So depending on the market structure, we'll be able to see that where the market is heading. So this is a, if you look at here, there is a 15-minute chart. There is a dynamic support has been created. The price is consolidating here. If you look at, and there is a potential for a breakout the way you can see the market, and at the moment if you look at, there is a break below which is now primarily breaking out of this trend line, but the market is potentially waiting for pretty strong reaction, what I think that's coming up potentially later, and that might bring the price back to the upside here to create a new higher high. So this is a significant, if you look at a bullish market structure at the moment, and with this bullish market, this break below here also creating a possible false breakout. Here there is a trend line. The market is broken out of the trend line, and the price is respecting the resistance line, creating a series of lower high and also here higher low. So if you look at here, this is, there is a break here, right? This is a potentially a false breakout. Where a few times we have seen earlier, the market has broken out of the trend line, again returned back to the upside to create a new higher high. So that's that sign the market may break to the upside, because more often when you see that there's a false breakout in one direction, the price normally goes back to the other direction. Welcome, good evening. Okay, now from the technical, if you look at, this is a consolidation, and here is it's creating, if we look at the 1 hour chart, it's creating a flag pattern here, and that flag pattern may, if you look at it, may eventually break to the upside. Usually all the flag pattern at some point break upside, right? So what's your bias today? Right? It's important that we look at the sentiment also. The market is on an, if you look at this 4639 is a new high, an all-time high, right? There are some also, if you look at the fundamental, let's look at the news here as well here. It's pretty volatile. Ram says 4 over power pro. So there are some news currently have on the market. The point crisis, what happened? Is there any move in JPY pairs? JPY having a really stronger rejection of the resistance line. If you look at the monthly, here's the monthly level that you can see JPY is moving, and with this support level on JPY where stronger breakout, the market may go back again to create a new higher high on JPY, which you could see the price to reverse again back above. So far JPY was in a stronger bullish trend, now slowly potentially coming for a pullback here in this market. So this is what we can see on JPY. The market had a breakdown and now trying to pull back to the upside here in that market. And if JPY is carrying bullish here, what kind of move that you can expect on gold as well? So we usually will see that opposite directional move on dollar yen and gold because they mirror. With if dollar is bullish, gold is gonna be bearish. But dollar yen's move is little independent because of the movement of the JPY and dollar. There's different chemistry always in dollar yen. And this is also a really interesting fact to look at. If you look at the JPY due to the policy, yen is always weaker due to their inherent policy. So if you look at this, speculation over yen intervention is hitting up again as dollar yen creep back towards the same danger zone. Okay, so usually yen is kept lower and therefore dollar yen is always more often act as a bullish. It's a very predictable currency pair in terms of the trend, for long-term trend that I'm talking about. So there might be some, if you look at here, look at the weekly, this is inherently a bull market, series of higher high and higher low. That's why sometimes it gets a lot of volume because of the predictable trend. But now we might see a pullback, but here on dollar yen, if you look at, there is still pretty bigger gap. The market is potentially reaching here 325 pip gap may be getting filled on dollar yen, which is a high possibility to happen. So in dollar yen, therefore dollar yen is on a pullback. So at any point you could see the market to bounce off this level as it tested the support on dollar yen and may go back to the upside again to this. It left an order block here, or it might come down for a deeper pullback. So we'll keep eye on that one as well later. And going back to gold here, that with the flag pattern, it's a very interesting price action. Big bull candle, red, green, red, green, red, green. So again, it's forming another red candle. So a flag pattern usually break upside. Okay, so that's a usual move in a flag pattern. Now, all flag pattern end up more often, not all, like more often you'll see that it's gonna break first below. If it is a bull flag, then grab the liquidity and then reverse back again to the upside. So in this lower time frame we can't see, but if we look at little higher time frame, 1 hour, we can see that flag pattern. And with this flag pattern, because it's a bullish flag pattern, we are looking this market to give us a possible entry back to the upside here in this market. So it's on the support level. We might see even a W formation here and then to go back to the resistance line. We're going for, if we look for an entry that we can look at once we see the price action confirmation, we'll see coming up today's focus is on PPI. So this is a double bottom and the market is trying to fill that zone, and this is where you could see the price to eventually break out here. And looking at the 30 minutes price action, also there is a 20 EMA crossover here, and with the crossover there is a doji. The market maintained that uptrend. It eventually bounced off that level. To look for a buy, are you looking to buy or sell today on gold? This is a breakdown that if you look at here, it's entirely a false break below and trying to move again back above here. So this is a significant trend line you're looking at. Now where the market is from this support level, is an important zone that you can look for entry. It's below the trend line here. You know, if anytime there is something coming that might have a huge spike in the market, and I think the market is eventually, if you look at this, is a extended consolidation with a multiple false breakout to the trend line that may break the market upside here. Okay, now to look for an entry is session open coming. What we are looking at the moment, see, this is a 5 minutes market price action. Until it clarifies the directional bias with a breakout, we need to wait for the market to show up. So this is a resistance line where it's approaching that key level, expecting it to break to the upside and then to create a higher high. Now here we can look for short-term bullish entry if the market shows that confluence for a new higher high. This is if you look at, this is entirely a bullish trend. PPI news update. Okay, now with the PPI coming in less than 2 hours, what we can expect today on PPI? Let's have some view in terms of the news as well as the data, what we can expect. Now if you look at the in the lens of CPI, so which is, we saw that lower in the first, which is the monthly, was pretty lower, and now in terms of, if we look at in the lens of CPI and PPI, they are very different, but with the lower data on CPI, how did that has impacted DXY? If you look at, now you can see the price action. The previous daily market was on DXY was upside. Now today the price is eventually coming for a pullback with this for this upcoming PPI, and then we'll see that also tomorrow will be unemployment claim. So those data, we can have some understanding of how the market may react to that data. Before we look at that, let's first look at the technical aspect of the market so that you can combine the fundamental with the technical. Now, how do you interpret an unpublished data, right? This is the first thing. You can know before anything comes up. This is the first thing, because it's unknown unless you have the information. But once it is unknown, there is something that we can understand from the technical, because once the data has come out and the market start to move, we'll be able to follow the trend like we did yesterday during the news. If you looked at the news trade that you have opened, was massive, isn't it? And the market in fact moved in from that level onward. So here we looked at the market, we took the trade, and it eventually bounced off the level. Now the market, after this few times of deepen, it grabbed liquidity multiple times off this level and eventually bounced off another key level of resistance in the market. In that area, we are now approaching another important level. That here there is a double bottom and there is a break of structure. One thing that we can understand from the technical is that it is creating multiple false breakout. That means the price is breaking this support many times. So when the market creates false breakout in one direction, more often you could see the market is going the other direction. This is a one technical point of view that we can look at in the market. News update in 2 AM. Watching from where I wanted to know from your analysis whether the market will go up or down. The market is bullish, so we always have to look at from the trend perspective. From the sentiment, if you look at, it is a bullish market, and there is another sign that this market may go up is before news, it's breaking out of this trend line, right? Because the market is breaking out of this trend line pre-data, chances for a breakout again with the data. Quite different from gold, but do you think the Nikkei 225 Japanese index can break below tonight? Japanese index, if we look at, because the market had a significant drop, and there is a lot of concern that was coming of JPY. So there is a news here that is saying that JPY is in crisis. Yesterday also you have seen some significant so if you look at the JPY, it says that, what is that? Again, it's the US dollar. The Japanese yen is closing in on the low it reached in 2024. Okay, yeah, that's what you see. In trade weighted terms, the yen is actually already weaker than it was, because its current appreciation is against a dollar that much weaker than back in 2024. Now, this is a pretty long story, but what we know is that firstly, yen is, the policy is to keep the yen weaker. Okay, this is the first thing, because the JPY is inherently kept weaker. in terms of currency because of to keep the inflation low. Okay, this is their policy. That's why you see that JPY is weaker against majority of the currency. But now potentially it became probably it's getting too weaker now in terms of dollar, and that is creating a concern here that JPY is getting too weaker. That might cause significant if you look at some of the economic risk that coming. Okay, so 0.225. If you look at the current index, you can see most of the switch on Nikkei 225. They are something pretty confusing. So it's just the opposite of interestingly JPY index, isn't it? If you look at, so this is a significantly bullish market if you look at, and with this bull market price, this is the daily chart. From the technical, it's bullish. Breaking below here can be an opportunity to go long. This is a support and the market may eventually bounce off this level. So it's a bullish market. Okay, so you can look at. Well, you can see there is a move on gold. In the meantime, the market has broken back below and carrying upside bias here. We might be able to find potential entry on as the market just tested the 20 EMA, getting a reaction back above here. We will be able to look for an entry after this. This is the 1 hour candle closing, tested the 10 EMA, getting some reaction, expecting it to bounce off that level again. Okay, so how does this market structure is creating the price action if you look at? So with a initial bounce, if you look at here from this support level, there is an initial bounce back to the upside, and that is bringing the market again in a zone where you can look for potentially a bullish entry once the market has shown enough confluence. Though there is a, if you look at in this zone here, sharp breakout has done the pullback. Okay, now how does the market is trying to create a downtrend, guys, after this extended consolidation. Here it tested the lower shadow. Welcome. Here potentially could see a reverse. Come on. What's happening? Okay. Double bottom and breakout here. This is sharp. If you look at, this is a sharp series of lower high, and the market has come back down below here to create a series of higher low, and they're marching in one point here. So basically this break below, if you look at here, this is a false break. Series of higher low has broken, series of lower high is still intact, so the market may eventually crack that to the upside. So in terms of any high impact news, this is coming up PPI. There is no breaking news. So at the moment, the market is trying to pick up here. We could see that this market may eventually, you see there is a price action that is showing a stronger bullish confluence here in this market. So we might see the price eventually break the high and then to create a new higher high. There's a crossover of 10 and 20 and the market is eventually breaking to the upside here, and that is that the market eventually could go back and create a new higher high. So it's significantly upside bias that you can see, and so we might be able to find an entry on a, if you look at it, it just has crossed this high. So we'd like to see an entry on a pullback of this move. Might try to break that high here, as it already crossed this high and could eventually create a new higher high. Now where the market is, it might be forming an order block here. This is a narrow doji, and I'm looking at possible entry on a pullback. Okay, significant bullish momentum that you can see. Therefore, any pullback below is what you want to look for buy here in this market. Ready for an entry. We see there is a breakout significantly back to the upside here, and it's going to be a little bigger stop loss if you look at an entry here. Okay, with this double bottom entirely broken back to the upside, here what we are looking at a pullback in this market, and breaking below can give us a possible bullish entry. Now the price is above this resistance line. If you look at, it's broken out of the resistance. Eventually you could see that stronger breakout. There's a gap open. Now we've been pretty packed with this potential move back to the upside, so therefore has done enough also liquidity sweep of this support, and I'm getting ready for an entry as soon as the market does enough pullback here. This is 5 minutes price action that you can see significantly bullish. Now this market structure that you can see, it's a one single breakout here, and with this breakout we'll be waiting for a pullback, and with a pullback we will be looking for another entry here in this market. At the top, getting ready for a bullish entry shortly after for this possible upside move. Recent high is here. This market is putting pretty strong pressure on that resistance line for there is a potential bounce back to the upside is higher, and so this is a current trend line and order block showing possible break above. So we can use a pending order here for an breakout of this all-time high, as there is a liquidity above this level, there is a volume here, and we will be using a pending order here for a potential break of this resistance line, as the market is significantly showing that there might be an upside bias here in this market. So if you look at the current resistance at 4639.63, this is the current recent high. We'll be adjusting a little bit here for getting the highest point. So 4639.91, which is 4640. Okay, and once the market breaks this high, expecting that potential further breakout. This is 60 pip here, and because it's an all-time high, we might see sudden breakout. PPI is still 1 hour remaining, so we'll try to take the first breakout here and keeping a stop loss. This is a pending order, not by market. Want to see first the market is breaking out with nearly to 60 pip stop loss for a potential bounce back to the upside with the upcoming this pending order will valid only until the PPI. If the market breaks above here only, you will be looking at entry with a pending order, so which will give us significant also risk reward here. And there is already a break below, so this is a buy stop order that we will be using because it's a significant resistance line. Buy stop at 4640.05, stop loss at 4634.07, and TP target we will be setting at 4650.00. So it is a buy stop order. If there is a breakout here, we will be on the trade. So there's a here a breakout trend line, and we place the pending order here for this potential breakout. If the market goes up, we'll be on the trade, and would like to see that it's going back here to the upside to create a new higher high. PPI, we are waiting for the news to come up here, and once the market shows enough confluence, we will be on the trade. Here is the price action. So this is an interesting market structure is being created here in that area, and now we place the pending order here for a breakout. If the market breaks out, we are on the trade, and that's what we are looking at to see if this is what is happening here. As there is a break below here, the market tested the 20 MA. There is a potential for a move. Now if you look at this is the 30 minutes price action, the market opened with a gap here, and then there's a crossover of 10 and 20 MA. Once the crossover confirmed, it rejected back to the upside here. There's also gap open in a similar way. So whenever there is gap open, there is a move that we can see in the market. Now here is the lower time frame price action. Okay, there is initial bounce, and we might get a trigger with the pending order, and we want to catch this move if the price breaks to the upside here with a move. Welcome traders, we'll come back to another live session here, and place that pending order for possible bounce. There might be looking to see some significant bullish confluence here in this market. Okay. Breaking above further, we might get a trigger or the entry. Now, if the market breaks out of this all-time high again, going to a new territory, there might be stronger breakout. Now, there are two factors that we can consider for this gold move, guys. One is the technical, which is the trend that you can see. What is else confluencing? Can you tell me? Let me see that how many of you really following along with the current system. So what other factors confluencing on gold move here? Got an idea? Share some of your thought and what's your research, or what do you think? What else confluencing gold pump today or this week eventually? So I've shared as a Q&A. You can share what do you think? What else confluencing gold's move back to the upside? Is it Fed interest rate or what else? Iran, okay. Anything else? What anyone has a different opinion? This is a valid. Yeah, the gold move more often is. How about the oil? Oil and gold, both of them confluence have a significant move on the geopolitical tension. So if you look at the DXY, DXY in a pullback. So what about the WTI? So looking at what happened. Now, probably you guys have seen the weekly Forex forecast that I have mentioned also about WTI move. There's a gap open and boom, that one also significantly breaking to the upside. So oil and gold, both of them are very news sensitive, especially oil also very news sensitive. And if you look at here, it's now entirely breaking back to the upside. So these are a sign of what else? Not only gold move and oil move, there are some other signs coming. Oil price rises in two situations. Both of them are two sides of the same spectrum. Okay, so if you look at that oil price is going up, you can sense something, because those who are investor or the buyers or sellers, they look well in the front. Okay, so if you look at oil prices going up, who is buying this oil? To go that much of far, there is a lot of buying pressure needs to come in the market. So if you look at here in this entire, this is the daily chart we are looking at, there was a sideways market, there's a breakup. So if you look at the two spectrum of this same thing, two sides of the same spectrum is when oil price is going up. One spectrum is when there is a high growth in economy, oil price might go up because of the high demand. Okay, this is one situation. The other situation is when there is a crisis because there is a low supply. In both situations, oil price will go up. So now if you look at that, oil is going back to the upside. So there is something coming up due to this geopolitical tension. So if you look at that, gold is following the same pattern here. So we can see there is a bullish confluence here. Now we got a trigger here. Okay, now here if you look at there is this is a rejection here, which is in fact happen when the market reach key level of resistance. Okay, so do you trade based on Elliott wave or have you started it? There are very few things that I haven't studied in the market. Elliott wave, you can trade Elliott wave, but if you are trading manually, so if you can automate your strategy based on Elliott wave, that is okay, because Elliott wave is to trade manually. You need first of all significant amount of time to analyze the chart for each wave, because there are 3 waves and you need to match all of these to match the criteria of the first wave, second wave and third wave, and then you need to wait for the breakout from the third wave to break the second wave's low, create all those patterns to form exact match to the Elliott wave theory and then to trade it. But the market, as I mentioned, the market never follows any specific rules or strategy strictly. It's a dynamic scenario. So the simplest strategy is the best to trade for long term if you are trading manually. But if you are trading using the artificial intelligence or automated system or aided system, then you can combine all of that confluences to give you additional confluence in your trading, because in that case you are doing it once and then you can the tool or artificial intelligence or expert advisor to do it, to repeat that system over and over again. Now keep in mind that any strategy that you use, the effectiveness of that strategy will determine on the risk management. Okay, now risk management will determine either a strategy will be working well or not. For example, one of the hardest part is to avoid the news spike, because the market more often will follow trend, will follow the technical aspect, but something is not up to you, right? The headline is not up to you, and the market will have that spike, spread widens, there will be order coming, going, that's not up to you. So that's the strategy, difficult for the strategy to predict, because you can find out the sentiment, but the sentiment will not always give you how much a spike you are getting in the market. So one of the best way that recently I have added in my strategy is to do in terms of spread widens. Okay, so you can do that if you are using an expert advisor. Maybe because as long as the market is trading within the spread gap is remaining, that means that bid and ask price not getting too far from each other. If the market become volatile, is still okay, either this way or that way. But the problem happens when suddenly there is a big spread, widens of the spread. That sudden fluctuate can go back to your stop loss and take you out of the trade with significantly bigger risk than what you have assigned to, and this not out of hand. There is another on the lower time frame, is that with daily candle close there is a volume drop, also the market goes in a widened spreads. These are some of the difficult things sometimes to keep in check. Let's say your strategy works very well, it works all the time, but there's a daily close, suddenly volume dropped, there's a running trade that has gone back to your stop loss with, for no reason, maybe minus 5%. So you gain throughout the 2-3 days 5% with one bad trade has taken that out. So these things need to be avoided if you want to keep a strategy functional for lower time frame. These are the key. Otherwise, the trend, okay, is the master of everything. As long as you are following the trend pullback, okay, look for order block. Order block is, if you understand order block and you can stay patient to trade the order block, that's a really good move that you can take. Because if you can identify the order block and see that there was a big move on the order block and the market may have a big move back. So order blocks work like that. Let's say order block is here, okay, the market dropped. Next time you will see that it will create another order block here, respecting that order block, the market drop here, and more often you see that it will respect that order block, the market will go back, little slippage down or back to the upside. So these are significant area that you can look for trading. Now, how do you identify the order block? Right? Understanding order block is, let me tell you how you can straight away identify order block. Look for sideways market consolidation like that, sudden breakout. Now it will leave a narrow candle here, that is order block. Okay, that look for that candle next time for the market to come back here. How the market retested, will reverse again back. It might not come from here. Could see the market has gone quite a few wave and then form another order block here. Sideways, suddenly one green candle to the upside and then entirely red move, drop to the next order block like that. So that's how the order blocks works all the time. Yes, I'm going to look at order block. That's a very important topic. In the meantime, what we are looking at here at the moment on the chart. Okay, so if you look at the chart order block, let me identify some order block and then we will be looking at those order block. So let me delete the current charts. So this is an order block. Okay, this candlestick pattern is an order block. Look at so if you look at this is an order block and see how the market reacted to that order block. It was in a downtrend, just formed this narrow doji, reverse back to the upside, and see how the market respected that candle. Let me draw overall level along the way, full area. If you look at, you see that the market respected that level over and over again. Okay, this is an order block. Looking at the top, you see this green candle is order block. If you look at, you see how that order block, that green candle is being tested. This is the support, exactly to that point, drop back down. The market from this order block straight gone back to exactly to that order block, drop back down here. So that's how the order block. So if you can identify order block and then trade it with patience, that's a big move. These are the universal strategy that works all the time, and you don't need any other things to trade if you can patiently trade those order blocks. So for example, here in this area, now you can't trade this narrow candle. This narrow candle seems like order block. Now those candlestick pattern you would consider order block if they have formed a valid reversal pattern, because there has to have a reversal pattern to form an order block. Okay, if you can see that in a pullback, it might form an order block and then can go back. So order block is where the smart money trades the market. So order block means that there has been significant order has come from that zone. That is an order block. Look at that, level has been tested many times. So when you see that an order block is being tested with a higher ATR candlestick and then had a significant rejection, that's a sign that that market might reject from that order block to the next order block. That means if it is this market bounce back to the order block, that might drop back down again back to the support level. So if you look at here, you can see okay, so here we can see there is initial bounce, the market slowly trying to create a structure here, and See that what kind of market structure is forming with a double bottom. This market may eventually break to the upside here, coming to the support. Day trigger, you can see the market is having now the market in a downtrend. From here might be a reaction back above. The pending order is still there, will still be there for a possible move. The pending order is still there, and you could see still the market is going up and hitting that level. What do you expect in news? There is a gap opening today. If you look at the daily market structure here, yeah, there was a gap open. Now, this market structure that you can see is a bull market, and there is the price is at an all-time high here. Now with a breakout after this triple bottom creating, the market is showing the trend continuation, and with this resistance line break, you see the market is in an uptrend here, so there is a higher chance for the trend continuation in this market. So we are approaching to the session opening, right? NY session. The pending order is there. There is still possibility for a breakout and then trigger. So I'm not entering earlier here for this market to go up and then to create a higher high. So eventually, if the market breaks that high, then we can expect the new higher high. So the pending order I will keep it still there because we want to see the market to go ahead and create a new higher high for us to be able to look for that buy. And structure is being created here is so kind of inverted like cup and handle pattern, but there is a the left-handed or the right-handed, right? Usually. So it's like this here. So it's a moon pattern. Yeah, so there is a gap open and that is one sign of trend continuation here in this market. So this structure here, this is also bullish move potentially as coming up the session opening, and after the initial candlestick pattern close here, the market has shown that there might be a trend continuation here. And at some point the price may break out of this consolidation, and that is where we will be looking at that entry in this market. Back-to-back few rejection of this support level here in this market. So looking a little bigger picture, if you look at this, is a significantly longer consolidation on the 5 minutes, and then there is a new higher high retested multiple times here, and now it's eventually bouncing off that level. What is else here coming up? So there is a breakout and we are on the trade. Yes, the trade is active. We have 30 minutes to go for the news. The trade is active and I'm running the trade. Okay. Pending order is on. Something happening. Some significant sentiment change. So this move that you can see, it's very unusual breakout, and candle close from the 1 hour that you can see there is a doji, and this is a very unusual breakdown here. After the false breakout, the market rejected back below, and will be re-entering here as lower time frame market structure that you can see here in this area, that giving higher probability for the market to have an upside bias. Suddenly there is a significant breakout, and if we look at still news, 30 minutes to go, why there was that much of volume that you will be looking to see. As a manipulation here, which is looking at here, bullish entirely sideways. This is a very predictable market structure at the moment due to the upcoming news. And now we are not that trade. There is this, if you look at, has done the false breakout and reversed back again. We will be looking for entry again after the market settles. So there is it's a very we will be waiting for the news 20 minutes for this time, and then we can look for that entry. Now it's started to trend down, and from the, because there is a, whenever the market is going to this all-time high, it's getting rejection from this higher price. So At this point, the price on a support level. Chances that the market will break further lower and then to with news, either we could see that going again to create a higher high or coming down to create a lower low. Entirely the market has broken that intraday support. Can expect a potential order block here. Then go overbought and need retracement. These two long week, it's a fake out and then return back. So two lower time frame candlestick pattern form very stronger red bearish move, which is now the market may eventually go back up to create a higher high. We could see the price breaking below. If it goes back to the upside again, that is where the market may go back and create a higher high, slowly trying to reverse from this level. If it trend continue back below here, then we have to wait because the global trend is bullish. We are looking to enter in the direction of the trend. So it's creating an inverted head and shoulder here in that area, and that inverted head and shoulder might go ahead and break to the upside, or we could see further downside, depending on, we have 30 minutes for the news to come up, and that will create a really significant spike that we can look at now for either the market to trend back up, which is in the direction of the trend, or we might see the breakup structure. Now daily price, if we look at the daily market, it left gap here, quite a few days of gap in the market. Now what is going up is likely to go up. That's the law of trading. Now if you look at this market here, it's maintaining that uptrending market structure. So if you look at that, as the market has created this significant move back here, and there is a possibility that this market to eventually go back to the upside here in this market, and you can see it's maintaining that series of higher high and higher low on the higher time frame, but we see there is a breakup structure on the lower time frame. Now I will always prefer the higher time frame in terms of this move. Therefore here we can look for this market to maintain its uptrend here. Alright guys, so hope that you are enjoying the live session. Make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. The scale of correction anticipated on, okay. Now there are two potential scenario. If you look at the 4 hour, you can see that this is the intraday 4 hour time frame. The market is on the 4 hour is still maintaining that higher low. So if you look at from here, it's still maintaining that higher low. Okay, a long week, and then big bull candle, another bull candle, narrow doji. The market is maintaining that series of higher low here in that market. So now it still can maintain the series of higher low, can bounce off that level because it's a bull market. The other possible scenario is the breaking below here and then bouncing off that level. So with this break below here, it's still moving back to the upside here in that market. So, and with this support test, looking for, you know, here if you look at from the support level, getting that reaction back to the upside. Here is market is showing up, and with a double bottom, it's getting that reaction back to the upside. Here's the series of higher low, and expecting that the market to eventually break that high. And from this support level, we can see the price has got the reaction back above here. It's a pretty stronger bullish candle. Now it formed this head and shoulder, and with this head and shoulder the market may here eventually reject back to the upside. So it is forming a textbook head and shoulder, but I think because the trend is bullish, we could see that the market to break to the upside here to create a new higher high. Now, depending on how the price action will form, it really depends on that. Interesting market structure is being created here, and so here this is a sideway at the moment, and we have 1 minute for the data to come up, and with this news in 1 minute time we will see the which way the market is having this spike. We might see that the price to break above or entirely coming down, but as the long-term trend is up, we can expect it to eventually break to the upside here in this market. So we'll see that where it is heading. And okay. Do you see here 0.5%, core retail sales, PPI 0.2%, retail sales 0.6%. So there is a positive data for DXY that has given a boost on this to the upside, and we see some spike below here on the lower time frame on gold. Now the question is, are you going to see this liquidity breaking back to the upside? We might see a spike up here because the long-term trend is up. Very choppy at the moment until we see the market settle for one direction. We can wait to see. Okay, so once this is 15 minutes price action from this support level getting rejection again back to the upside here, and we can see there is a, we might see a weak fill here in that market. Okay, so with that weak fill from the support level could go back up and fill that zone. Structure is being formed, is not tradable yet. It's very choppy, it's not trending, and this is very choppy. Until it creates a clear structure, it's impossible to enter into the trade, because it's, if you look at here, It's getting the reaction back, and so if we look at the recent resistances here, very long wick rejection here that you can see, and so with data the market is still not showing a clear trending direction. Now in this area we are looking at for possible bullish confluence here in that zone, and with this bullish confluence we'll be looking at this market structure to break to the upside here, and if it breaks this trend line in this area here, okay, if we look at this trend line breaking out of the trend line, that could take that market back to the upside here to create a new higher high. Okay, so you might be seeing potential bounce of this level, and to enter we will be waiting to see how the market is creating this. Is still on a sideways. Mixed sentiment, yes. What is the scale? Yeah, we see that there is a mixed, significantly mixed sentiment here in that, and is because of that's why the market is not finding any clear direction. So if you look at that, there is a mixed sentiment. You won't be able to see a clear direction in this market. Okay, so if you look at here, that there's a long week, quite a few, and the market has broken down in all direction, going up and down until it find one clear direction. You see that the market will show a directional bias here. So once it shows the directional bias, here you'll be able to see which way the market is potentially be heading. But at the moment you can see there is a crossover. With that crossover, we can expect that, you know, it might now break out of the trend line and then reverse back again, going back again, back and forth. It might do that way, but at some point you see this, the market will go in a trend, and that's what we are waiting, because to enter the trade in the direction of the trend is the best decision, the first, because, you know, today I had 2 times fall into the false breakout, which is how the market does, because especially before especially, you know, what's happening around the globe is also important for the news, and the gold and WTI movement. See, there are quite a few zone here. Okay, so we see there is a, from here it's slowly moving back to the upside here. There might be now potential breakout. If we see that clean breakout, that is where we can look for that entry. That's ready for okay, so inverted head and shoulder breakout. Are you going to see new higher high? As we looked at earlier, this is a very unusual structure being created until we see that clear trend. We are looking at here for an entry. Okay, so the price has created a new all-time high at little higher and then rejected back again. It's going back again to the upside now. Are you going to see a new all-time high, or coming down back here below to create a new lower low? Which one is to look at? It's depend on future, isn't it? Can you predict the future? This is where also coming down to the probability in trading, right? So the future is in superposition. That's also the trading. As a trader, need to understand the probability, right? So will the market go back and creating a new higher high, or it's just ranging in that area. All possibility exists, isn't it? That's what the probability of trading. So all possibility exists, not in a concrete form, right? It remains in a superposition. Every moment coming up is in the superposition. And then how does that come into existence? Through the observation and action. How can you observe the future? You can observe future through your imagination, isn't it? So if you imagine, it's where you are observing the future, and then you take action to that imagination, it's coming to an existence. So that's why all the outcomes remain in superposition, infinite number of slides. Depending on your action and observation, it's gonna bring to your experience. So now the market, not only one person's observation and action, right? It's a collective results. That's where also the same rules applies. The more people will think that the market will go up, that's the more observation. More people will take buy trade, more action, and then it's gonna unfold accordingly as one reality, right? So like the quantum, if you don't observe the electron, it's gonna remain in a wave. It's called the wave particle duality. So it's in a wave, right? In an superposition. But when you observe and take action, you'll see only one. So that's also sometimes 0 and 1. That's used in binary. So 0 is nothingness, right? There is nothing here, just quantum superposition. 1 is when you observe, it appears as only one outcome. But in that observation, if in that 0, that means that's nothing reality, there is also the wave, and that wave also has a trough and high, right? So this is how the energy transfers, right? So wave is not, if you look at the water wave or any wave, it doesn't move objects, it just transfer the energy from one place to the other through the wave. So that is where, depending on how our emotion and energy also, we stay at some places here or here, and based on that we imagine and act and creates the outcome of that future. So the market is similar kind, isn't it? So depending on how you want to see, it's gonna unfold accordingly, because that's why until we see that there is a clear trend, because that's how the market moves, we'll be waiting for the market to give us a clear directional bias in the market. Now this is in this area that you can see the market is in a very choppy manner, and from that choppy area we want to see that clean breakout and then to trend. getting some interesting rejection of this level. So still the market structure forming very interesting, and with that market structure formation, expecting the price to go ahead creating a new higher high. Here is what we can see, the market is maintaining that sideways market here. We will be waiting for the price to create a new higher high, and then we can look at that entry criteria. So because the market is in a zone where there is an all-time high, there is a significant sideways movement that you can see in the market, but I think it's gonna shortly we could see that breakout. There was an extended consolidation. This is an, I would say, that extended consolidation after this massive uptrend. If you look at the overall market that I'm looking at here, there was a significant uptrend here, but in that uptrend there has been sideways movement that you can see in this area. So that sideways market is in effect before large breakout with the upcoming data, and that might give us significant opportunity after this breakout. Every day is different in trading, and I believe that, guys, you have enjoyed today's trading, and we are coming tomorrow with also GBP and unemployment claims on dollar. We'll be trading in the live session. I think the market will be waiting for a breakout of this consolidation, and then we can look at entry. So that being said, thanks for joining here, traders, and I hope that you enjoyed. I'll see you again with the next live session coming tomorrow onward. Until then, stay well, stay happy. Speak soon.